Hey investors, Mumi here, MacroMarket's 24th April 2025. So today's topic is a market rally, but nothing much has changed. Uncertainty remains. So what happens is that recently Trump has turned softer tone against China, stating that 145% tariff is too high. But then at the same time, it won't be 0% after they realign their expectation. And at the same time, he won't be firing Jerome Powell as well. But anyway, before I continue, he's actually unable to do so legally and constitutionally as well. So he's actually just like a gangster who just want to do whatever thing that he wants to do because of the president's immunity. But there seems to be some interesting observation over here. Trump seems to want to defend this at SPY around $500. So back then when the market came crashing down all the way to about 480, and then he started to say that now is a great time to buy, and then you guys are weak, you guys are panicking, now is a great time to buy, and the market eventually rallied. And then eventually also naturally it kind of pulled back a little bit, and then he started to right now tone down his tone, and then market has rallied 3 days, or rather 2 days after that. So it might actually be a case that he's trying to defend this zone. And of course, it's not just about equity, right? But they are also probably looking at the US dollar, the bonds market, and also the equity markets as well. So these are just some key levels that we got to watch out for, especially during this whole season. And tentatively, US versus non-US total stocks is actually trading at a very like right smack at the bottom of the uptrend channel. This uptrend channel has been around for more than a decade. So this trend channel is actually a very strong, reliable channel as well. And so right now it's right smack at there. So which means that right now US might actually be at a very value zone right now. And in terms of this whole crash, right, a lot of people are talking about like it might actually be the tariff, but actually on the other hand, on some perspective, right, it may not even be about the tariff anyway. So if you look at this trend channel over here, total stocks, US versus non-US, on the December 2024, US has been trading at a very historical high manner. So maybe a lot of fund managers and also retail investors, they are kind of like rotating their, or probably institutional investors, they are rotating their cash from US over to non-US. And then if we were to look at other charts such as US versus non-US tech stocks, okay, so these actually started during October 2024. And if you were to look at Semicon, which is what I invest in, it actually started all the way on 9th of July 2024. So one thing I love about Semicon is that it's actually quite risky because Semicon is actually a forerunner. So Semicon first shown that outperformance in US market first on July, and then eventually the broader techs became overvalued around September. I would say September, and then for the broadest market, that will be around December 2024 as well. So what can we learn from this? At the very least, for myself, right, I would in the future to do better, right, I will be monitoring the VIX and the market mood under the strategy ecosystem. And then in the event the market were to be at a euphoric level, especially particularly the semiconductor industry, since I invested in this, then in that case I'll widen the gap for the long wheel strategy, reduce the gap for the short wheel strategy, and then rebalance all the way down. And with some statistics and price action, I can actually see that I can actually make money when the market is continuing crashing all the way down. And even if the market were to go wrong, I wouldn't be too wrong as well. So I think this whole episode allows me to rethink about my whole structure and force me to think through and also think into the evergreen wheel strategy as well. So what I did yesterday, right, is that I closed out some leaps. This is actually a sleeping bear ratio recovery trade. So yesterday there was a spike up again, and I know that it should actually hit a certain short-term high zone already, so we should be seeing some pullback very soon. So because of this, right, I took the opportunity to sell some kangaroo cover call for about $500 over, and then eventually I also took the opportunity to just close down the recovery trade. But I realized two things, which is that instead of 17K, I'm now left with 12K cash, and then instead of my total break even from $13, it's actually right now $15 instead. So what I am going to do is to rebalance my existing wheel strategy. I'll tune out my wheel strategy and then tune down my kangaroo cover call, so that instead of selling, let's say 43 contracts of this, I may sell 40 contracts of this, and then I'll take 3 contracts and then sell it under the wheel side, so that I'm able to balance the immediate cash flow. At the same time, I'm able to ride the wave up again together with the stocks itself. So most importantly, be it now or in the future, always just continue to look out for blind spots such as this, to ensure that in the event certain things will happen, we don't realize it too long. Lastly, the ratio this time around, we are reaching like near 100% profits zone again. So suspect that in this kind of market condition, the reversal should be pretty much near the corner. If not, I'll see you again tomorrow. Bye.